then just maybe this was just a brief correction which resolves higher. Hey there, traders and investors. Bennett Tyndall with TradingAnalysis.com. Today is Tuesday, November 11th. November 10th. We're diving into the S&P 500. So over the weekend, we saw continuation in the markets. Sunday open futures looked rather healthy. That continued overnight and into the open on Monday. Early Monday morning, we saw news out of Pfizer regarding the coronavirus vaccine. There was obviously a very favorable market reaction to that news. In fact, you saw several stocks which had been beaten down as a result of COVID actually start to tick back to the upside. It was an interesting move. If you take a look at the chart of Disney here as an example, and take a look at the pre-market yesterday, you'll notice right here at 5:45, which is 6:45 on the East Coast, Disney started to rally from 129 up to the 147.68, and simultaneously we started to see the kind of stay-at-home work from anywhere trade begin to unwind. That's reflected here in shares of Zoom. Zoom in the pre-market had a very interesting move from the 516 that it was trading. Notice that 545 candle again. We went from 516 all the way down to the 400 handle at the open. Quite the haircut for shares of Zoom. Peloton also saw a move. Peloton, coincidentally, is up on the session. 132.79. And then again, yesterday, pre-market started to fade on the news out of Pfizer. Peloton is one that I do think will continue to perform well. I could see shares of Zoom continuing to see some pressure, but I do think Peloton, given their subscription model and given the fact that I think a lot of the kind of new habits that we've developed as a result of COVID will be here to stay for quite some time. You add to that many gyms that close down, and people just won't have the access perhaps that they did have prior to the coronavirus. So taking a look at the S&P 500, we're looking at the daily chart here. We've got a couple of indicators up. We've got a daily 50 moving average and a daily 200 moving average. We also have RSI and the TTM squeeze indicator. And from a traditional candlestick analysis perspective, you could certainly say that was a kind of an ugly candle to print into such an extreme in the markets. And I would have to agree with that. But from an Elliott Wave perspective, that's just one of the methods that we utilize to conduct our technical analysis. Looking at this through the lens of Elliott, we're seeing what could be the makings of a correction that resolves significantly higher and finally, just maybe, gets this market out of correction. You might not know it, but the S&P 500, as well as most other major U.S. market indexes, with the exception of the NDX, as well as the Nasdaq Composite, have been in correction mode since January of 2018. Really rather remarkable. You'll notice if you were to draw a trend line from the February 2018 low through the body of the December 2018 low candle, that's where we ran into support on the move back in March. If we flip the script, project from the September high, project that through the February high, look where that takes you. So this expanding resistance trend and pattern that we're seeing continues to be respected and is still technically in play. We've essentially been in a period of expanding volatility, lower lows, higher highs, and we haven't truly exited correction mode in the indexes, but we very well could be gearing up to see that happen here in the near future. So taking a look at the sector scoreboard on the session, it certainly wasn't the tale of tech and growth. As you can see, leading the charge, we had energy, staples, as well as industrials and utilities. Taking a look at the IVE, value ETF up 1.31% on the opposite end of the sector scoreboard. The SMH, which is a semiconductor ETF that we like to track here at Trading Analysis, down 3%. The XLK down 1.86%. The NDX down 1.74%. Growth down 1%. We also had consumer discretionary in the communication sector was in negative territory. The S&P closing slightly in negative territory there as well. And taking a look at the other indexes, you'll notice I put out a video on Russell 2000 small caps yesterday, and you'll see the rut up another 1.88%. New York Stock Exchange up 0.7%. Dow Jones Industrial squeaked out a positive close, up 0.9%. Boeing on a bit of a move there with industrials. So let's dive into the charts. We're going to look at the daily chart here of the S&P. And you'll notice here's our daily 50 moving average, which we're essentially looking to backtest and consolidate. And we're viewing this as a post fourth wave breakout. And alternatively, this could be the makings of the higher degree move, which does take us out of correction. So off the daily, we're going to drop you down. Let's go back to the daily here just to kind of show you what we're going to focus in on. We're going to focus in on all of the price action from the September 2nd high through the October 30th lows. And then we're going to discuss the monstrous move that we've seen off the October 30th low. So we'll drop you down to a 1 hour chart, and you can see that white circle that I had drawn on the daily is now visible here on our 1 hour chart. And what we've got going on is you'll notice here off the September 2nd high and into the 24th low, we have what we're viewing as an A, B, C standard three-wave move. Notice our C wave was equal to the magnitude demonstrated in the A wave of the same degree. We then have another 5-wave move up, a 3-wave correction in the form of a sideways flat. And then again, we have a measured move in that C is equal to A. So 3 down of equality measured moves, 3 down or 3 up as a measured move. Then we have the 5-wave decline that took us into the October 30th low. Really rather interesting piece of analysis here is the fact that wave C was exactly equal to, down to the hour, just about equal to the time that it took us to exist between September 2nd and September 24th. Corrections of the same degree often tend towards equality, as does corrective legs of the same degree. Said otherwise, wave C is oftentimes equal to wave A, either in duration or magnitude. In this case, it was in duration. And if I were to zoom in, the equality came in 1 hour after the market bottomed, which could just be due to time change if you think about it. But it's really rather fascinating that the amount of time that it took the markets to correct down to the hour from September 2nd into September 24th was exactly the same amount of time that it took the markets to correct from the 12th of October through the October 30th low. So let's get rid of our moving averages and our RSI, and let's just focus in on the wave structure here. If you tune into our TA Live Wednesday live stream show, you'll know that we were looking for that 5-wave print to unfold into some sort of a wave 2 correction. And off of the October 30th lows, you have a nice 1-2. I spot 1, 2, 3 acceleration gaps in the higher degree third wave. The higher degree third wave was about a 261% projection of wave 1. And it does have a beautiful 5-wave subdivision with corrections of the same degree, which do demonstrate equality to one another. We then complete our wave 5 at our traditional 2, 4, 3 Elliott Wave trend channel, and we're now in the makings of an initial A wave, which is part of the wave 2 correction. We've been essentially sideways on the session. We're looking for this to resolve lower down towards 3,500 support, bounce back up, form a downtrending channel that we can accurately forecast, and at that point, we're going to look for wave 2, the C wave, to complete this wave 2 correction, and then we'll be looking for a turn to the upside in the markets. Wave 2s can be very tricky. They can take you to a variety of retracements. They can end at the area of the previous fourth, which would represent about a 38% correction. Alternatively, they could be also a 50 or 61% or even a 78.6% retracement. So the way that I would look to trade this, if you are looking for any short-term trading opportunities to the downside, await the A wave completion, look for the B wave retracement, look for the required subdivision to call that complete, and then you can start projecting your C of wave 2 correction. All right, we're going to go ahead and leave it there. You know where to reach us, tradinganalysis.com, stock options, cryptocurrency, as well as Forex. Thank you all for tuning in, and I hope to see you guys bright and early tomorrow morning, 8:45 Eastern on Todd Gordon's YouTube channel. Myself, Todd Gordon, Terry, Alex, the whole TA team coming at you live. It's a lot of fun. We'll see you on the next video update, and hope to see you guys on the YouTube stream tomorrow. Take care. Good night.